we begin inside the Roundhouse with New Mexico in Focus political correspondent Gwyneth Doland. Monday, the House Taxation and Revenue Committee sent a wide-ranging tax package to the full chamber. This week, Gwyneth tracked down the chair of that committee to understand what's inside.
Representative Lente, thank you so much for talking to us today about taxes.
Thank you for the interest in wanting to talk about taxes.
All right. What are the overall goals of the package that your committee passed this week?
The goals of the committee's tax package for this year is one that we want to help working families out in New Mexico. We want to be able to put money back into the pockets of hardworking New Mexicans. We want to be able to lower taxes where applicable. And then we also want to make people accountable for the taxes that they maybe have been enjoying for a little bit too long in the state.
So that last part I wanted to ask you about. The plan would raise the personal income tax rate on the highest earners. With this big budget surplus, why bother raising?
That's a good question, and we thought about that a lot. During a surplus like this, it's not about trying to raise taxes to make a point. The point is that we have right now, we've had a almost flat tax rate for a long time, and the focus is now to begin to create progressivity in this tax rate structure. And so at this point, we added two tax bracket structures for the top highest earners. And at this point, we're looking at probably affecting about 3% of New Mexicans that are those top bracket earners. So that if you make $150,000 plus as a single filer, you will probably see at that $150,000 level, your tax increase about $2 a person. If you go up to $200,000, you may see a tax increase of about $600 to $700 for that person. Then if you go 300 plus, you will see a tax increase of about $1,200 for that person. Married filing jointly is a different animal in itself. So everybody that has an income combined of $250,000, $250,000 and less, will see a tax reduction. Those that are above that will see a tax increase, again, of about maybe for $250,000, I think the amount is about $600. And then if you go to $300,000 plus, it then escalates to close to $1,000.
So, in terms of the corporate tax rate, there's a little hike there too. And, businesses were really crushed by COVID. Is this the right time to raise taxes on businesses?
That proposal was one done by Representative Jason Harper, a Republican ranking member here in our committee, and he felt that the flat tax rate of a 5.9% was in fact the way to go. And so in supporting all our members on the committee, I made it a point to make sure that he felt included in the package, and that was his proposal, and we're going to go with that.
And there's a decrease in the amount of tax that we pay on stuff we buy and services, the gross receipts tax.
When you look at the gross receipts tax, the deduction of 0.25% last year in last legislative session, in addition to if we can get this package through of 0.5%, that's 0.75% of a reduction in our GRT rate for this state, which does far more than any pyramiding or taking away of the pyramiding would ever do. You'll see more for working families in our state that are running down to the local grocery store to pick up a gallon of milk or maybe buy school supplies or whatever it might be. So those types of reductions are, in this case, bold initiatives in a time where we need to have bold ideas to create the state opportunities to move forward.
You said pyramiding, so I'm going to follow up on it. So what we're talking about is things being taxed at several levels so that by the time the consumer is paying for something, they're effectively paying a bunch more tax on something. I understand that Albuquerque and Santa Fe fought this really hard because they were worried about losing money from those taxes. Right. But is it a good idea?
The concept is understandable, and I think in terms of a small business that maybe does not have that in-house attorney or doesn't have that in-house accountant that has to go and shop that around, it could help them absolutely. There's no question about it. But when you look at the funding reduction that in Albuquerque or Santa Fe or any point in between in the small towns and small cities that had a line out this room when they heard about how it would affect their bottom line, was something that I asked the sponsor, again, Jason Harper, ranking member Republican from this committee, to say, if you can work with these communities and find them and get them on board so they can appreciate what you're trying to do, then I think at that point we can include it in this tax package. And I worked with him shoulder to shoulder to a point where at the 11th hour, I called him up and said, what's the status? we should probably call it a day because it sounds like they're not coming to the table. And so the concern was for those counties and those municipalities that them having millions of dollars taken away means that they'll have less of a police force. They'll have less of an opportunity to provide social services for their community members. And so the list goes on. And so, we have to do things and try to balance the situation the best way we know that we can. And so the reduction of the GRT, I think, by far takes into account an appreciation for our small businesses and helps to create less of a burden for them. But we had to listen to our communities as well, knowing that if crime plagues our communities, we want to make sure that we have that extra policeman or policewoman, that we don't lose them to a GRT reduction.
Camila Feibelman, thank you so much for being with us today. The House Tax Committee this week passed a big old package of a zillion different elements, but several of them are climate related, and you're following those. What's in there?
Well, first of all, Democratic leadership in the House and the chairman, Lente, made sure that all three of the climate-related House tax bills made it into the package. So that's incentives for purchasing electric vehicles, for doing home, commercial, or industrial storage of renewable energy. So especially the EV bill is really good for middle to low income families, because if you are within a certain income level, you can get $4,000 off of your electric vehicle. It comes back to you in cash if your tax bill isn't high enough, and you can combine it with the $7,500 tax credit that's available federally to really take a big chunk off of an electric vehicle, improving your own air quality, your community's air quality, but also saving you money at the gas pump every day.
There's also an element that would incentivize energy storage systems. What does that mean?
That's right. Well, there are two bills, and it deals with it in three different ways. So if you have solar panels at your house, you could get a tax incentive to have a battery. Or if you're at a commercial facility, like let's say an ag facility, then you could get a battery to store that energy for later when there's no sun out and to use it later. But there's a third bill that also applies some of the tax credits that the solar industry has to the industrial storage industry, so that the sun shines during the day, you capture that in a battery and you deploy it at a time when there's less sunlight.
There's only about a week left. How confident are you about making it over the finish line with these?
Well, I think just given that three of the bills alone are in the House tax package, they have to pass the House floor, that the Senate will follow suit with that leadership. There are also many other bills that need appropriations in the budget, and some policy bills that still have to get over the finish line. We're hoping that on day 60 that we can say we made good progress for the climate here at the Roundhouse, especially after a summer of ferocious fires, terrible floods, and families that are still suffering the effects of global climate change. It is here now. It is a disaster, and it's affecting real families. And if the people in this House don't do anything about it, we leave ourselves that much more exposed.
Richard Anklam, thank you so much for coming and talking to us about tax policy, which is your forte.
Happy to, anytime.
So one of the things in this bill, in the bill passed by the House Tax Committee this week, is tax rebates for regular folks.
Right.
Is this a good idea?
It's an expedient way to get rid of some excess cash that the state has that they don't know that they can bake into the budget and have to spend in future years. So on that level, absolutely. Could the money be better spent? If you could save some nuns and orphans somewhere with it, yes, absolutely. But yeah, no, I don't fault them or flaw them for taking that approach.
It's not just a political giveaway. Hey, we're giving you money back, vote for us again.
Well, there's an element of populism to it, of course, and it's the second year in a row. We're blessed with excess revenues, but none of us know, what the future looks like in terms of will those continue. So rather than, they're growing recurring budgets as well, but they're trying to take a little off the top, I think, and just give it back to everybody. I think that makes sense on some
When
levels.
people get rebates, do they put the money back into the economy?
Generally speaking, most people spend every dime they have. So yes, most of those rebates do end up back in the economy, and subject to gross receipts tax and all that kind of stuff. People.
I was going to ask you about gross receipts tax. every year we're up here talking about GRT.
Right.
And it's a love-hate relationship,
Sure,
right?
yeah.
So what's in the works right now?
Right now, they're in the House package is just a 0.5% rate reduction on the state side. So what that translates to, whether you're in Las Cruces or Albuquerque or Santa Fe, whatever the applicable rate is there, it'll go down by another 0.5%. And that's in addition to the 0.25% that was reduced last year. Long term, you were asking about, can that have implications? Yes, because that is a recurring expense. It's a recurring savings for taxpayers. It helps individuals. It reduces regressivity. It reduces the incidence of pyramiding for businesses. But at the same time, it's a recurring cost. So 5 years from now, if we're not blessed with the revenues that we have today, would they possibly consider restoring part or some of those rates? Yes, absolutely.
And then you get accused of raising taxes.
Yeah, and then you're a tax raiser, right? And right now you're a tax cutter. But yeah, again, it's not a targeted solution, but it broadly touches a lot of issues, but not in a huge way. It's 0.5%'s not. It's meaningful. But you're not going to notice it tomorrow on your receipt at the
Something
cash
people
register.
might notice is a change in the personal income tax rates.
Yes.
What's at work right now?
So the proposal that's come out of the House adds a couple of brackets to our current structure. It restructures the brackets, and for most income levels, it actually represents a tax decrease. Because of the way, formally in New Mexico, you hit the highest bracket around $18,000 in taxable income, and then it was flat. And that's a result of changes years ago in the Richardson administration. They basically just peeled off the top 4 brackets. This legislation restores a couple of brackets. It actually does raise tax rates.
What everyone wants to know is who's going to pay more?
People making more than me. And that's what matters to myself and most of your viewers probably. But it is, those incremental rates are at higher income levels.